Metro Vancouver's condo market is in dire shape,
I would say it's probably dead at this point in terms of the activity.
and pre sales are so low it's forcing some to rethink current projects.
Canada's real estate super bubble is showing signs it wants to burst. Not in all markets, but the two most expensive markets in Canada, and others want to follow. The reason that you watch my show is because you won't see any of this on mainstream media. Let's get into the show. There is zero surprise here. I've been educating my audience for nearly 2 years on my TikTok and Instagram, and it is my pleasure to be here on YouTube. I much prefer to do long form content for all of you. Do people not realize that prices can't keep going up year over year like they've been doing for nearly our entire life? Yeah, this bubble has been forming since they brought rates to zero, and they extended that zero policy for a significant amount of time. And people went all in and prices went straight up. And now we're faced with a situation where our economy is not running at all cylinders. We have the threat from down south. Our interest rates have not fallen back down to zero. They've only come down half. But there's something that people don't know about how interest rates work. This is straight off of the Bank of Canada's website. Understanding how monetary policy works. It takes time for our interest rate decisions to filter or be transmitted through the economy, through the financial system. And when we look right here, when we adjust our policy interest rate at the bank, we don't expect immediate results. It usually takes 18 to 24 months to see the full effects of interest rate changes in the economy. See, it doesn't affect the economy right away. Often it takes a full 2 years before it is felt in the economy. So where are we at? Surprise, surprise. Let's go back 2 years. July 12th of 2023, exactly 2 years ago, we officially peaked out at 5%. So now we are officially feeling the effects of all the interest rate hikes combined as of right now. And the interest rate cuts, they started May 31st of 2024. So we won't benefit from these interest rate cuts until next year in May. And then it will go all the way down to March of 2027. You heard that correctly. So we need to wait almost 2 years to feel the full effects of all the interest rate cuts. And we're not done cutting. This is what's going to happen. Mark Carney promises a trade deal with the United States on July 21st. If we get that amazing trade deal, the Bank of Canada will be in a position, and their next interest rate announcement is on July 30th, to make a cut. But if we do not get a trade deal with the United States by the 21st of this month, the Bank of Canada is not going to be in a position to cut. They're probably going to wait until September because they never move ahead of the curve. We're going to start things off with the Toronto real estate market. Here are all the downturns in history to take a look at where we are at. When the line ends is when the prices started going back up. But if we take a look, the longest downtrend in history was 1989 to 1996. Nearly 10 years of either declining prices or flat prices. We are currently at 3.5 years of price decline in the city, in Toronto metro area, with prices all the way down 30% from peak. And it looks like we are going to continue with the trend from the 1989 to 1996 downturn. It doesn't look like we're going to have the financial crisis or the other downturn. We're going straight into the 90s downturn, which means we could have declining prices in this market for the next 2 years. And why do I think that way? It's because what I said before, it takes 2 years for these interest rate cuts to work through the system. We're not going to see the benefit of cutting the interest rate from 5 to 2.75 until summer of 2027. And the most alarming part is Canada's population exploded over the last 3 years. It was the fastest growth in our population in Canadian history. And prices in Toronto are heading down. Yeah, all of those real estate experts were coming out. You better buy now before you lose your chance to enter the real estate market. Well, today you could see what's happening with your own very eyes. FOMO provided us this data set. It's the sales to new listing ratio. If you are in the bottom half, that's the buyer's market. There's price pressures going down. If you're in the middle range, that means it's a balanced market. They could be going up or down or staying the same. And if you're in a seller's market, there's price pressures that are going up. So who is in a seller's market right now? In the West, we have Edmonton, Regina, and Winnipeg. And in the East, we have Bancroft, Montreal, Quebec, Moncton, Fredericton, and Halifax. Now I want to focus on the buyer's market. Where is there price pressures on the downside? Notably, Vancouver and Toronto are on the list. Okanagan, Barrie, Guelph, Windsor, Niagara. Those markets are in a buyer's market. You're going to see Calgary is in the neutral range, but we have new information. I don't think they're going to maintain the neutral range. They're most likely going to be heading into that buyer's market. Hold on to your Snickers bar. Newly released information on 3 markets, the notable ones.
From the Toronto Regional Real Estate Board. This follows numbers from Vancouver and Calgary, where sales in all 3 cities are slumping and bidding wars seem to be a thing of the past. Scott Peterson is following this for us this morning. Good morning, Scott.
Good morning, Juanita.
So what's the reason for this downturn?
The reason is persistent uncertainty. This is according to all 3 real estate boards across the country, and this is despite real estate boards really getting ready for a busy spring market. We had rate reductions from the Bank of Canada. And they're just not seeing it this year, and they're pointing to all the uncertainty with our biggest trading partner, with the U.S. and the tariff impositions there. Let's take a look at what we're seeing from new numbers out from the Toronto Real Estate Board just this morning, that we're seeing basically the same story in all 3 cities, and as we're seeing rising inventories and lower sales and lower prices. So Toronto home sales last June and this June down 2.4% from last year, about 6,200 sold during the month. Prices also soggy from this time last year, now down about 5.5%. Average price now just over $1.1 million for all types of homes in Toronto. Now new listings, and this is where it gets interesting. Active total listings are up 31% from this time last year. That means there's now over 31,000 unsold homes in the Toronto area. Vancouver sales, similar story here. Their sales are down close to 10% year over year. 2,100 sold in the month of June. Prices also down about 2.8% to $1.17 million. New listings are up. Active listings in particular up 24% from last year. Over 17,000 unsold homes now are up for sale. Calgary home sales, similar story, down a whopping 18%, 2,200 sales in the month of June. Prices down 3.6% to $586,000. And again, new listings up, total listings up 83% to 6,900 homes listed for sale. So really the signs here are clear for all 3 markets. And it is soggy sales. It's a buyer's market. We're not seeing the bidding wars that we saw in the past. We're seeing sales being soggy and also new listings piling up for people wanting to sell their homes are unable to sell their homes in this environment.
Yeah, they're not able to sell their homes in this environment. This is something that's rapidly materializing. And we just saw Calgary. They were in neutral. Check out 86% increase in listings, and their sales are down 16%. Watch out in the city of Calgary. Let's look at the city of Vancouver. This information is going to be an eye-opener for many of you. Active listings in Vancouver reached their highest ever. The average home price in Vancouver was $1.273 million, which has decreased by 5.7% annually, but increased slightly for the month. In June 2025, the benchmark price of homes was $1.173 million, which represents a 2.8% decrease and a 0.3% decrease. Vancouver's benchmark price is up 49% over the last decade, but it's down 6.9% lower from its all-time high. So we're just getting started in this market. I showed you Toronto. It's down 30% so far. The detached home prices, and this one stands out the most here, is down 11.3% year over year at $2.08 million. That's the largest decrease out of all product classifications. Attached is just down 2%, and condos is down 4.7%. But I got some more data on Vancouver. I want to show you this chart. I've never seen this many listings in my lifetime. And I want to explain something because I'm boots on the ground. I look at the real estate market all the time because I live in this area, as well as I have a real estate background. I passed my real estate licensing exam. I also have my mortgage license. So I look at this market. There's nothing selling. There's a bunch of houses that have been on sale on my street for nearly a year. They've price reduction of $200,000, and I've yet to see anyone go into the open houses, and they're throwing them almost weekly. No one is looking at purchasing a house right now. Yes, there's probably some sales that are occurring, but it's either massive price reductions, or it's one of those houses that is gorgeous and really well located. There's still some people purchasing, but overall, nothing is selling right now. Pay close attention because this is the most important part. This will give you insight on where the Canadian real estate market is going, more specifically in Vancouver and Toronto, but it will trickle out to other markets as well. The Bank of Canada's restrictive monetary policy report in 2022 and 2023 curbed housing market activity by raising interest rates. Higher rates reduce the present value of rental income from homes, while also increasing mortgage rates, making home ownership less affordable. As a result, Canada's average home price peaked in February of 2022 and declined by 25% by January of 2023. But then, remember this? The Bank of Canada paused interest rates in January of 2023, and FOMO came flying back into the market, which caused optimism, and it fueled prices to increase 19% by May of 2023. And that's when the Bank of Canada is like, oh no, we don't want this to happen. So they increased interest rates in June and July in 2023, which softened demand and led to price declines until November of 2023. Between November of 2023 and May of 2024, anticipation of rate cuts drove another spike up. In June of 2025, which is now, with the Bank of Canada having cut rates all the way down to 2.25% over the past year, monetary policy influence on housing appears to be waning. Well, of course, no one's buying anything, even with the rates that were cut below half. And remember all the realtors, all they say, you better get in the market. They can't use that script anymore because prices have been coming down now. And they're like, oh, prices are down. It's more affordable. Just buy it. Don't be so fast. Let's continue. A more stable market has shifted the focus towards housing intrinsic value with less influence from speculative sentiment or FOMO. Like I said, nobody wants to be holding the bag, and FOMO means fear of missing out. Nobody wants to be holding an asset that's losing value. Over the past decade, municipal restrictions on housing supply have kept availability low while investors leverage borrowing to acquire more properties. This occurred despite Ontario and British Columbia prioritizing tenant securities over landlords' rights. The belief in perpetual home price appreciation gave mortgage rates a role in the shape of the market. See, when rates went to zero and the Bank of Canada told everybody, go ahead and buy a car, buy a second house, buy an investment property, millions of Canadians did exactly that. However, in more recent volatility may challenge this assumption. Oh, really? Encouraging more disciplined borrowing and reducing monetary policy influence in housing. This is a warning sign, everybody. While monetary policy impacts all of Canada, real estate remains highly local. Ontario and BC, which heavily influence national price trends because they are the most expensive real estate. And that's where all the speculation comes from. But what happens is when prices get bid up in Vancouver and Toronto, people sell their home for like $2 million, $3 million, and they move to the Okanagan, or they move to Calgary, or they move to other markets with those bags of cash and fuel those markets. It doesn't just stay in Vancouver. When someone sells, they're going to move their money somewhere else. So when you see the two speculative markets in trouble, that could spew trouble all across Canada. Now, this is the most important part. Housing bubble fueled by ultra low interest rate post 2008 and during the pandemic are officially over. So what do you think is going to happen into the future? We have a 7% unemployment rate and it continues to go up. You better have faith in Mark Carney that he's going to get that deal done by July 21st. And hopefully it's a beautiful deal for Canada. And for all the people that want to know what's going to happen with their mortgage rates, listen closely. With the Bank of Canada cutting interest rates since June of 2024, variable mortgage rates are expected to decline through 2025, while fixed rates might have seen the bottom, the lowest, due to their forward-looking nature. However, this may not reignite price surge in Southern Ontario and BC, where home values remain unsustainably high, even with lower borrowing costs. The warning is, we all know what this means. It doesn't matter how much they cut. We've seen the end of this bonanza, which is a good thing. I think it'd be good to have balanced market across Canada, but I have a feeling we're going to see some more price reductions before it's all done. Take a deep breath. It's not all bad. Prices were getting out of hand. There was so much speculation and it just kept going up, bidding up the prices for our children. It was unsustainable. This is healthy. You only lose when you sell. So if you're forced to sell right now and you purchased at the peak, you're going to be taking a loss. But if you purchased 25 years ago, it's not a big deal, but you still need to sell your home if you're using it for retirement. I'm going to be providing everybody updates on the Canadian real estate market. So make sure you subscribe to my channel. Leave a comment. I want to hear from you. What are you seeing in your real estate market? I'll see you on the next report.